Well, the D-Day is upon us, the day of the Union Budget, and hours from now, the Finance Minister Nirmala Sitharaman will be tabling the Finance Budget and the Union Budget 2023 in the Parliament. What can she really deliver to propel us towards the $5 trillion economy mark? And what could be the agenda to make us leap forward? Let's try and understand that. The debate is whether the advantage or the increase that the government gets in terms of the increase in revenue to the coffers, will it be good enough to kind of take it away from the market sentiment? Because right now the market sentiment is a tad bit weak. The year hasn't started on a positive note for India. Plus there was a bit of a nervousness, which is at least out of the way now with the Adani FPO being fully subscribed. But do you think the government will tweak around with capital gains to a large extent?
So let's look at the market. When I was looking at data just when markets closed, in last 1 year the Nifty change is 1% from last budget to this budget. The mid cap index is down, the small cap index is down. Unlike last budget where everybody went with high expectations, with loaded positions, with a view that okay, economy is going to chug along very smartly, 2023 positioning is very different. Markets are light. There is a sense of fear. The best of the bulls are on a backbench. There are no large leverage positions. That's the backdrop. So markets are light, but markets are also nervous. In a nervous market, if news is bad, which markets are not anticipating, the selling could be open up. Because buyers would not come. FIs are selling, and buyers in general have lost a lot of capital and money in some of the haloed stocks. So if a change is done in the capital good, in the LTCG, it is bad news, and I don't think markets are prepared for it. Then let's understand two factors here. One is tenure, which is, just to break it for our our attendees here and some of us who are watching us, is that India has different asset classes, and every asset class has different tax structure, different regime. It's very complicated. Very complicated. You'll agree with me?
Yes, absolutely, and I'm sure everybody watching will agree. It's very difficult for the compliances to happen given the different type of rates, surcharges in the asset classes that you talked about.
But I believe, Anisha, every asset class has a different intrinsic nature. And the nature is described with volatility, which is that equity is a much more volatile asset class. You're taking a higher risk. With real estate, you take a lower risk, and with gold, the risk on a longer term period is minimal. So equity, since it's a risky asset class, I would always say that should always be given a preferential treatment. But different, we can argue this, I dodge in terms of ideology. Second is, since specific taxes, the short term taxes in India 15%. The long term is 10%. Long term is if you keep stocks more than 1 year, you pay 10% tax. Short term, you keep stocks for less than 1 year, you pay 15% tax. There is also one more category, which is the FNO category, where if you, whatever profits are, they are computed as business income, depending on the slab you are in. It could be 15% to 30%, even more than 35%, depending on the slab you are in. So if the short-term taxes are taken to business income, if the short-term, which is 15%, becomes business income, that is bad news. Bad news. Okay. If the long-term taxes are changed, duration is changed from 1 year to 2 year, I think it's a 400-500 swing Nifty point, because by and large markets know that sooner than later
it's going to happen.
It's going to be there. This debate every time happens, and every time the true stock market investors would say this is not the right time. So this is not the right time. It's never the right time. Nobody wants the change.
The tax
exactly. Duration and time is what nobody wants to do. Nobody wants to hold stocks for long, and nobody wants to pay taxes.
Higher taxes, true.
But my fundamental argument is that there is something called a good to have tax, and there is something called need to have tax. The fiscal consolidation and the revenue uptick in the system is so strong that by incrementally changing the tax structure, even it is in short term, making it business income, or changing the tenure, is not going to give you an incremental yield.
The revenue won't be that high.
Which would be in proportion to what the government is trying to fix. Let's be clear, it's not the best year for global economy. Not an ideology, but that's the reality, what we've discussed. If you're standing, India is standing out, is because others are in trouble.
Exactly.
So
and that's what IMF just said, right? They're still talking about growth being slower, a lot of challenges there for the global economy. So pretty much the context.
That's the point. So let's see what happens. But I sincerely feel that this budget, if it is status quo, if the 3 C's are maintained, markets will see a spike. If there is no tinkering in taxes, that's a big positive. Markets are light, but if there's tinkering in taxes for a market which is nervous, it may just backfire.
Well, we'll have to see what happens with respect to that, but a lot of volatility is what you can expect. But Nikon, just to wrap it up, if I had to ask you the top themes or stocks that one should keep on the radar, the kind of announcement we should watch out for apart from the capex, etc.? What would be those key themes, you believe?
See, I'll tell you, how do you differentiate what is the need of the economy? The need of the economy, number one, is to get more investments. Where are the large investments happening in the world? One is in alternative energy. India is a hydrocarbon deficient country.
Correct.
We are a solar and a wind surplus country. So energy transition is something what 2022 has taught us. So I expect something to happen there, whether it is on the lines of wind energy, solar energy, or even hydrogen.
Green hydrogen, right.
So something which the government will have to address. You will have to ensure that inflation is something which is here, and inflation, unlike last 5 years, next 5 years would be high, which means you need to give more money in the hand of taxpayers or on Aam Aadmi. So if there is a tax cut, the rural dominated stocks, whether it's a Maruti or a Hero MotoCorp or an HUL, if something changes there, that becomes the second go-to place. Third, I think, would be manufacturing. We've spoken about it, but you cannot have an economy which wants to be the number third in the economy, which is only dominated by services. China did the mistake by not going towards services. They only wanted to be manufacturing. They are playing. It has to be in balance. You'll have to come up with more PLI schemes. You'll have to come up with more specific things. So what are the large capex happening in the world? Energy, manufacturing, and EV. I think that those are the themes which would be there. Apart from that, standard stuff, healthcare, yojanas of welfare schemes,
rural healthcare, etc.
But if you're asking me for a budget trade, the budget trade really would be centered around these three themes. But if there is a tax cut, some of the rural stocks could also come back.
Interesting. So let's see what really the finance minister delivers today. A lot to watch out for, not only the changes in the capital gains tax, but personal finance as well. And the big themes to watch out for, whether with respect to capex, defense, etc. and manufacturing, will be important to track. We'll be there with you right here on ET Now to break down the entire analysis post the budget as well.
If you like this video, then like, share and subscribe to ET Now.